Powell is Deputy Chief Economist at CIBC Capital Markets. And Benny, I guess I wanted to start there. You know, we've talked all along about the possibility that the pandemic doesn't unfold as smoothly as we hope. Here in Canada, we got one picture. Our major trading partner has a very different picture, and it's hard to sort of gauge what the impact will be. So once again, for you economists, a little bit of a tough nut because it's, you know, I don't know how you're making your forecasts when there's so much unknown about what lies ahead.
Absolutely. We simply cannot make a forecast that makes sense. We are guessing like everybody else because everything depends on this virus. We are seeing a clear second wave in the US because they really didn't close the economy the way we did, the way the Europeans did, and now they're starting to pay the price. This has significant implications for the rate at which this economy will be able to expand into the summer. So we might outperform them during the summer, and that's actually good news for Canada. But at the same time, we have to realize that the numbers that we got today from the labor market, don't get used to it because July will not be as good.
And we're looking at where the jobs were created. Obviously, it's important to see that in construction, Benny, because that's a seasonal number. So if it doesn't happen now, it doesn't happen ever. That's good. In terms of the other rebounds you're seeing, I mean, 40% is, of course, great. It's not 100%. It's not a recovery. So we're not there yet by any means. Is there reason for optimism when you look at the breakdown here?
Yes, if you look at construction, manufacturing, you know, all those seasonal numbers, they are telling you that we recover about 40–50% of the job loss. That's good, but again, July, August will be positive numbers, but will not be as strong as those numbers, unfortunately, because of the second wave. And then you have the other side that is not in this chart, which shows you that financials, education, you know, business services, they are recovering only at 20% relative to the decline. So they recovered only 20% of the job lost. And what we're starting to see more and more, Amanda, is even when you recover a job, it doesn't mean that you are at the same level of productivity as before, because you, especially, let's say, construction, manufacturing, you have to keep distance from other workers, so you're not as productive. But also, and that's what I'm starting to pay attention closely to, is permanent jobs loss, especially in financials, in education, in government, basically jobs that will not come back again. And that's something that is starting to emerge. In fact, even with this positive report, we got a significant increase in the number of permanent jobs lost as opposed to temporary. Very, very important to remember.
And I guess also remember, Benny, that the number of permanent jobs lost will only creep up. That there's a lag effect on that, and that even as we see economies reopen and businesses get back to work, that's when others will actually have to face the facts that they don't have the capital to continue.
That's exactly it. And if you look at the small business bankruptcies, they're starting to rise. That's where the damage is. Basically, this recession is a small business recession in Canada and in the US. At the end of the game, when the fog clears a year or 2 years from now, we will see a significant number of small businesses in both Canada and the US that cannot open again. That will have a very long-lasting impact on employment, and we are starting to see that now.
We are seeing, obviously, different states experiencing this massive increase, and they're handling it quite differently in terms of how they will try to get the pandemic back under control. We would normally, Benny, expect to see, over our Canada Day, over the U.S. July 4th, a big bump in certain numbers, right? There's lots of travel that goes on. There's lots of special food buying that goes on. Will we still get that bump, do you think, given everything that's going on?
Absolutely not. We will not. It will be all domestic. Even if you look at Canada, most of the travel will be domestically oriented. That will impact positively some industries. If you look at transportation, if you look at the job report, what they're telling us, in transportation, they are basically able to recover only 10–15% of the jobs lost, telling you nothing is happening in this environment, and that will continue to be the case. So no, this is going to be a very different beginning of July, something that we have never seen before, unfortunately. Even in the US, it's getting more and more difficult with a significant number of states showing a clear sign of a second wave. And therefore, even though we got some good news from manufacturing, even though we got some good news from the labor market, unfortunately, the next set of numbers will not be as good. And that directly or indirectly will impact Canada as well.
Tell me, obviously we're going to get a jobs report on this side of the border next week. Do you expect it'll mirror what we see in the U.S., or do you expect to see some differences here?
No, I think it will be basically the same. The cyclical story will be the same. Construction, we know that the numbers are rising. We see housing starts rising. Manufacturing clearly will rebound. We got some numbers from there as well. At the same time, if you look at education in Canada, if you look at transportation and even some government jobs, they will not be there. And I'm starting to look at more office-oriented jobs. We even saw it in the June numbers. The other cyclical ones are starting to rebound, while office-related jobs are actually going down and down and down. There is no rebound there. That's the more permanent segment of the job loss that we're going to see. So it's going to be very, very similar. I expect a strong number coming from Canada showing the same story.
And when we talk about those job losses versus some other types, are there some jobs we should watch for, Benny, that have a more dramatic impact on our overall economic growth?
Absolutely. I think that if you look at what's going on in the manufacturing sector, construction, real estate is the pioneer of this recovery, and we're going to see a very nice improvement there. But we have to recognize one thing. The fact that we get more jobs does not mean that you will get the same GDP growth that is associated usually with those jobs, because the productivity aspect is very, very important. So everything depends on what you can do in this kind of new environment. As a society, we are learning slowly to live with this virus. We actually can operate, and we will be even better at that. But it means that we will do it at a reduced productivity level, something that as an economy, we have to get used to it up to 2022, I believe.
All right. Benjamin Tal, great to have you with us. Appreciate it. Benjamin Tal is Deputy Chief Economist at CIBC.